The CPA has two rules which apply to in-person transactions at the point of service. One addresses payments where a card and a personal identification number, or PIN, are both required, and the other addresses transactions where the payment device, such as a debit card or key fob, doesn't require a PIN. First, let's examine Rule E1, which sets out the requirements for PIN-based POS payments. These transactions are initiated at a bank machine or using a merchant's POS device. They can be either debits or credits. PIN-based POS debits are initiated by an individual to pay for goods or services or to obtain cash at an ABM. They result in a debit to a cardholder's account. PIN-based POS credit transactions are initiated by a merchant to credit the cardholder's account in the case of purchase returns or refunds. The key requirement for PIN-based POS payments is two-factor authentication. Both an FI-issued debit card and a PIN are required for a transaction to proceed. These payments are made in real time, authorized immediately over a network connection, and once approved, are final. Customer protection is a key element of this rule. When making a PIN-based POS payment, the customer must be provided with the ability to make corrections while entering instructions, the opportunity to review and verify the transaction amount before they authorize it, and the ability to cancel the transaction at any point prior to payment authorization. Next, let's examine Rule E4, which governs PINless POS payments, which can also be debits or credits. PINless POS debits originate in a face-to-face environment when a payor uses a CPA member-issued payment device, such as a bank card or key fob, to pay for goods or services. PINless POS credits are used by merchants for customer refunds or merchandise returns. Rule E4 also addresses the procedures that apply if an inquiry or complaint is raised by a payor regarding whether a transaction was duly authorized. The key element of this framework is that it upholds the key principles of consumer protection, safety, and authentication while eliminating the requirement to enter a PIN. This further reduces inconveniences such as waiting in ABM and store lines. Now, let's take a look at the requirements for online payments, which are governed by Rule E2. These are made over the Internet. Online payments are initiated by a customer. While visiting a merchant's website, the customer orders goods or services and chooses to pay using the merchant's online payment service. During the payment process, a connection is established to the customer's online banking interface. This allows the customer to authenticate their identity by signing in and gives them the opportunity to review and authorize the payment transaction. An online payment is essentially an order from the customer to their FI to send a payment from their account to the merchant's account. Online payment refunds can be initiated by a merchant to credit a customer's account in the case of refunds or merchandise returns. Rule E2 sets out key safeguards to protect all parties involved in online payment transactions. It protects merchants by supporting a good funds model, which means that once an online payment transaction is completed, the customer cannot reverse the transaction within the service. Financial institutions can't subsequently dishonor or return an online payment transaction via the CPA's clearing system either. To protect the consumers, FIs have agreed to apply the principles of the Canadian government's Code of Conduct for the Credit and Debit Card Industry to online payments. Rule E2 enables Interact's online payment service and is an excellent example of the way CPA works with the payments industry and stakeholders to facilitate the introduction of new payment offerings. The CPA has also issued certain guidelines for prefunded debit products permissible under the CPA's payable through policy. In broad terms, payable through arrangements are those in which a CPA member plays the role of an intermediary and does not have a direct relationship with the end user of the debit card or device. The funds by which payments are made are held or managed by a non-CPA member who makes the pay-no-pay decision for payment authorization. Products permissible under the CPA's payable through policy include certain distinct open-loop pre-funded card programs. Many of these are available in the Canadian market, such as certain payroll programs, travel card programs, and healthcare and benefit cards. Many of these products are backed by a network brand and can be used anywhere that network is available, in the same manner as traditional debit cards. Some open-loop pre-funded cards also allow cardholders to get cash back as part of a retail purchase and to withdraw cash from automated banking machines, ABMs, in participating networks. It's important to know that the CPA supports evolution in Canada's debit marketplace. To help explain how our rules and policies work, we've named specific products and scheme operators, such as Interac. But we take a device-neutral approach in the development of our policies, rules, and standards. This leaves the door open for financial institutions to establish relationships with new payment scheme operators and offer new products and services to their clients. All CPA rules, as well as the guidelines for pre-funded debit products permissible under the CPA's payable through policy, are publicly available on the CPA website www.cdnpay.ca.